Becoming wealthy is often seen as a mix of skill, strategy, and sometimes luck. However, Warren Buffett, one of the wealthiest men on earth, has shown that building wealth is less about chance and more about disciplined choices, patience, and a sound philosophy. What if you could learn the secrets that helped him accumulate his immense fortune? What if the path to wealth didn't have to be as elusive as it seems? Buffett's strategy isn't about taking high-risk gambles or chasing fleeting trends. It's about patience, long-term thinking, and understanding the value of a good investment. The lessons he teaches can be applied by anyone, whether you're just starting your financial journey or looking to fine-tune your approach. In this video, we will dive into 7 core principles that Warren Buffett follows, drawing upon examples from his life and career. You will learn how to apply these principles and what they can mean for your financial future. Number 1. Invest in what you understand. The importance of knowledge. Warren Buffett has famously said, "Never invest in a business you cannot understand." Why does this matter so much? If you cannot grasp how a company makes money, or what makes it successful, how can you expect to predict its future? This seems so simple, but many people still fail to follow this rule. For instance, Buffett was initially cautious about investing in technology stocks, recognizing his limited knowledge of the industry. But when he finally invested in companies like Apple, it wasn't based on trends or hype. He understood the company's ecosystem and its future prospects. Buffett's long-term investment in Coca-Cola is an excellent example. Buffett understood the company's brand strength, global reach, and the consistency of demand for its products. While others may have overlooked its potential, Buffett saw it as a simple, understandable business with durable competitive advantages. This investment continues to generate substantial returns for him. How well do you understand the investments you're making? Are you willing to do the work to understand a company's inner workings before investing in it? In the end, if you don't understand the business you're investing in, how can you expect to make money? Number 2. The power of patience. Waiting for the right opportunity. How many people are constantly looking for the next quick gain? The next big thing? Buffett, on the other hand, has famously said, "The stock market is a device for transferring money from the impatient to the patient." Patience is one of the most powerful tools for wealth accumulation. Buffett's success didn't come from buying and selling stocks quickly. Instead, it came from buying companies he believed were undervalued and holding them for the long term. One of Buffett's best-known investments was his acquisition of Geico. When Buffett first purchased stock in the insurance company, it was undervalued by the market. Many investors were too impatient to see the value, but Buffett understood the long-term potential. He patiently held onto his shares and ultimately bought the company outright when the opportunity arose. Are you willing to wait for the right opportunity, or are you swayed by the noise of short-term market movements? Patience often yields greater rewards than rushing into decisions based on temporary trends. Number 3. Focus on quality, not just price. Buy great businesses at fair prices. Warren Buffett has often stated that he prefers to buy excellent businesses at fair prices rather than good businesses at cheap prices. The temptation to look for bargains is strong, but it's crucial to assess whether a cheap investment is actually a good one. Buffett's investment in American Express in the 1960s provides a perfect example of this principle. At the time, the company was embroiled in a scandal that caused its stock price to plummet. However, Buffett saw past the short-term problems and recognized that American Express was a high-quality company with significant brand power. His investment in American Express turned out to be one of his most lucrative. Are you looking for businesses with a solid track record and strong potential for growth, or are you getting distracted by low prices? In the world of investing, the real value often lies in quality, not just price. Number 4. Invest for the long term. The magic of compounding. One of Buffett's most quoted pieces of advice is, "Our favorite holding period is forever." Compounding is one of the most powerful wealth-building forces in existence, and the longer you allow your investments to grow, the more they will benefit from compound interest. Buffett's own company, Berkshire Hathaway, is a testament to the power of long-term thinking. The company has grown exponentially over several decades, thanks to Buffett's reinvestment of profits and the time compounding has had to work its magic. If Buffett had been more focused on short-term gains, his wealth would be significantly less than it is today. How much time are you allowing your investments to grow? Are you thinking in terms of months or decades? The longer you allow your investments to compound, the more you can leverage the power of time to build wealth. Number 5. Avoid debt. The dangers of leverage. Warren Buffett has always cautioned against the use of debt. While many people use leverage to try to amplify their returns, Buffett has always favored financial prudence. Debt can turn a good investment into a risky one. During the 2008 financial crisis, many large banks were struggling because they had taken on massive amounts of debt. Buffett, on the other hand, had been cautious with leverage, which allowed him to take advantage of the crisis by making shrewd investments. For example, he invested in Goldman Sachs and General Electric, both of which had been struggling due to the crisis but were fundamentally strong companies. Are you taking on debt to fuel your investments? Or are you avoiding debt to reduce your financial risk? While leverage can magnify gains, it can also amplify losses. Do you want to take that risk? Number 6. Surround yourself with the right people. The importance of a good team. Warren Buffett's success is not just the result of his individual effort. He has often credited his partner, Charlie Munger, for being instrumental in his success. The right team can provide valuable insights and perspectives that you might not have on your own. Buffett's partnership with Charlie Munger at Berkshire Hathaway is a prime example of how surrounding yourself with the right people can lead to greater success. Munger's logical thinking and focus on rationality complement Buffett's more intuitive investment approach, helping the company grow and thrive over decades. Are you surrounding yourself with people who challenge you, offer diverse perspectives, and help you grow? Who are the key people in your life that can help you achieve your financial goals? Number 7. Think independently. Don't follow the crowd. Warren Buffett has repeatedly stressed the importance of thinking independently. It's easy to follow the crowd, but often, doing so can lead to poor investment decisions. Buffett's approach is to follow his own analysis and convictions, even if they go against the prevailing market sentiment. For instance, during the dot-com boom of the late 1990s, many investors were pouring money into internet stocks. Buffett, however, stayed away from tech stocks because he didn't understand the underlying business models. While others were caught up in the hype, Buffett's decision to stay out of the market led him to avoid significant losses. How often do you follow the herd? Are you willing to make decisions that go against popular opinion if you believe they are the right ones? Independent thinking can often lead to superior results in both investing and life. Becoming rich is not about luck, high-risk bets, or chasing after the latest trends. It's about making wise, informed decisions and having the patience to allow those decisions to pay off over time. Warren Buffett's approach to investing and wealth building is a blueprint for anyone looking to achieve financial success. So, are you ready to start thinking differently about wealth? Will you take the time to learn, be patient, and make thoughtful decisions that will set you up for long-term success? Remember, the road to wealth is not a sprint, but a marathon. Start today, and you might be surprised at where you find yourself years down the road.